Good morning, good afternoon, good evening, depending on where you are on the planet, and welcome to the Bull versus Bear webinar. Steve Miley on the call for trade day on Wednesday, the 29th of June. Welcome, everyone. Apologies for no webinar yesterday. James had some issues, so was unable to deliver the webinar. I'm back with you today, though, and we'll go through our usual regular run through what's been going on in the markets in here from a fundamental macroeconomic geopolitical perspective. We'll look at the calendar, what we've had, what we've got coming up, and we'll take a look at the charts. Right, I'm going to kick off, with the calendar. I'm going to start, oh gosh, not signed in. Excuse me 1 second. Sign me out. I was signed in. Okay. Here we go. Well, I'm going to get the feedback loop if I'm not quick on here. I'm going to hear myself speaking. Okay, we got through. I'm going to jump back to yesterday's data. And yesterday's data, I think, was one of the main driving forces from yesterday. Usually not a big mover of markets in here, but we had the consumer confidence number in here came in. That doesn't show it in here. Oh, sorry, that's Korea. Where are we? US consumer confidence data. Sure, we had. Here we go. Consumer confidence data expected at 100.4, came in at 98.7. Okay, 10 a.m. On Eastern time, and definitely the market's kind of reacted to that in a negative way. Saw a notable setback. Tech stocks leading the markets lower in here, and that was one of the main drivers of that. If we're looking into the data going into today. We've already had a host of data in here, European data in here, consumer confidence data coming in pretty much in line with expectations. There were some parts in here we see in green, but overall in line with expectations. Most of the data in there from the European data. If we go into today's data in the US, actually we've got German CPI. So we're going to keep an eye on that. Obviously, the world's, third or fourth largest economy. The German economy, and so we're certainly going to be keeping an eye on that. Inflation in Germany, that comes out in 27 minutes time. And then we've got US GDP. Now, despite GDP being a big headline number, right, it's not that significant as a real trading number because it's very lagging, right? This is the Q1 quarter-on-quarter data, right? We're at the end of Q2. Right. So, it's very backward looking data. I'm not expecting that to have a significant impact on markets. We also get PCE prices quarterly data. Now, the more important data is that PCE month-on-month data that we're going to get tomorrow. I think that's correct. Yeah, tomorrow. More importantly, probably going into today, though, is we have various central bank speakers, including Chairman Powell of the Fed. And they come, you see in here lined up 9 o'clock, 9:30 in here today. And they are, so we've got Lagarde from the ECB, Bank of England Governor Bailey, I think other central bank speakers as well speaking. You can see down here Lagarde in here and Bullard speaking as well today. So what we're going to see, this is the ECB Central Bank Conference in Portugal. So that'll be interesting to see what comes out of that. So we certainly need to be watching that. We also get, I think, two sets. I'm sure I saw two sets, maybe because of holidays, but we're getting, where are we, of oil data today. EIA data in here, Cushing data in here, coming in here at 10:30 Eastern time as well. So we're certainly going to be keeping an eye on that. So EIA data and Cushing data coming out today, and then that is going to be important. The ECB conference, central banker speaking, GDP not so important in here, I think, today. Just looking then at 5 things to start your day. So highlighting here, tech was hit. Tech was the leader lower yesterday. Nasdaq down more than 3%, and consumer confidence, they're focusing on that here, and then lower again in here this morning on the overnights. So not good overall. Crypto looking vulnerable again in here. The $20,000 mark on Bitcoin, back below that in here today. So some concerns there. Inflation situation. So we've already mentioned this. The central bank ECB conference in here. So we're going to be certainly head to the Federal Reserve, ECB, Bank of England, the Bank for International Settlements will be a key event today. We've already spoken about that, so we're going to be watching that. Former White House aide portrayed a violent and out of control Donald Trump in his presidency final weeks. Okay, I don't think we need to focus on what Trump was doing back in his final weeks. European stock indices down this morning with the weakness in US from overnight and then further weakness in the futures in here. German bonds, they raised an early rally. Hot Spanish inflation. Okay, we didn't look at that, but Spanish inflation pushing higher, and that's a concern, obviously, for the whole Eurozone. And then we've already spoken about what's coming up today. We also get Mester and Bullard speaking later today. Another thing, not in today, so in today's US version of Five Things to Start Your Day, now just they're talking about, crypto market sell-off and how it's impacting on some kind of things that might appeal to the younger age group, shall we say. But I mean, not really that interesting here. Just before we go to that, though, what I do want to do is just go back to the Bloomberg homepage in here. So if you don't subscribe to 5 Things to Start Your Day in here, on the homepage in here for Bloomberg, if you go across here on the 5, if you go here, the right-hand column, the most important market news of the day, get our market news. So if you fill in this, just pop your email in there, you get that. Now, a lot of these Bloomberg articles are paid for. You can't get them. The 5 Things to Start Your Day you can get for free, and they send that out via email each morning. So there's a different version. There's an Asian version, European version, a US version, depending on when you put this in, what time zone you're in. Okay, so so I received the European version. So as I say, the US version today, this 5 things what we're running through now, has got this, this at the end there was the editorial piece, right? And in this editorial piece, this was on today's one in the US one, they're talking about crypto, so we're not that interested. But there was an interesting piece in here that we saw from the European piece in here this morning. So I'm going to kind of skip read through, but basically, veteran stock traders are still waiting for the big capitulation that often comes at the end of the bear market, which we haven't really kind of seen yet. The interesting thing that he's pointing out, though, is that what we saw on each of the dips so far this year, so the sell-off in January, then we got this rebound, and then ETFs saw inflows on that January through February rebound. On the March rebound, inflows into ETFs. In this May rebound, inflows into ETFs. In this latest rebound that we've seen over the past week, we saw outflows, right? Outflows from ETFs. So what this is telling us is when we saw the sell-off and the rebound, people were buying the rebound in January, March, May. What we're seeing on this rebound is people selling the rebound, okay? So getting out of positions, okay? So that's the beginning of the end, right? Investors throwing in the towel. ETFs obviously are slightly longer term investments. So what we're seeing is in longer term investments kind of then saying we're exiting, we're getting out. So this is a signal that we're maybe getting closer to the end. It's not saying we've had a final capitulation. Maybe we get another blast lower. Maybe it goes down towards the lows and highs. Maybe it turns up back up from here. But what we're seeing is certainly the beginnings of maybe the bottom going in. And that's what that article is talking about there. So we've already covered the main. These are a lot of similar. By the way, so just out of interest as well, Finland and Sweden took a major step towards NATO membership, which is going to put them right. Obviously, they border Russia, and that's going to be that's a kind of significant military development anyway. And that's because Turkey, who have been kind of slightly opposing their membership, have dropped their opposition. Right, what else I want to talk about in here today? Right, so some headlines from the major news wires. So stocks climb amid worries about growth. So that worries about growth was what we were talking about there with respect to the consumer confidence and data that we saw from the US yesterday, and then record Spanish inflation in here this morning. So we can just go back and look in here. Spanish data, do we still have it up here? No, maybe I actually haven't got it on the, if I go to the filter, no, it's not on there. But if we go and just take a look at the article in here, I'm sure it'll run through record Spanish inflation. Unexpectedly surged to a record, okay, in here. So, it was higher. Doesn't give you the actual number. Let me see if I can, it'll open here. 10%. Estimates were for 8%, 8.7%, excuse me. And so yeah, and we've got Germany and French. Remember, we've got that German data. So that's going to be. We really do need to watch that German data on the back of that Spanish data. If this German data is high in here, so we've got that now in 20 minutes time. Okay, we'll be off the call by then. If that's a high number, that could be have a negative impact onto European stocks and drag the US futures lower pre the US cash market open. Okay, so you certainly, given on the back of that Spanish data this morning, definitely need to be keeping an eye on this German data in here going into today. And euro area bonds, parry sharp gains of a. So yeah, so euro area bonds went up in price, down in yields, but then have gone back lower in here after that inflation number from Spain. What else do we have? Well, stocks skid as, can't read the headline there, consumer data flashes recession worry. We've already discussed that. And if we look at what we've had in here this morning, European stock bourses across the board, on the back of weakness in the late market yesterday in the US and further weakness, that Spanish data, obviously driving stocks lower in here this morning. Inflationary pressures, meaning uncertainty, meaning higher interest rates. And that's negative in here. And we're seeing, European stocks, how much, where's the IBEX? There's the IBEX, that's the Spanish market, down 1.78%, sort of actually not actually leading lower. DAX, that's the German index, has led the market lower. Let's take a look at the US stock futures in here this morning. So obviously we were down 1.5% on the Dow. The Nasdaq was down more than 3% yesterday. Not a big sell-off in here after, given what Europe has, pushed it even lower this morning. But we are down about 0.25% in on the S&P and Dow. Actually, no, only 0.14 on the Dow and up to 0.4%, just under 4.4% on the Nasdaq. Quick nod to the SME tool in here. Look, so this column is shrinking all the time. This is the next meeting. Now, still pretty much nailed on. We're going to get another 75 basis point. But at one point, this was over 100. In fact, there was another column over here saying that we were going to get potential for a 100 basis point hike, right? We're pretty nailed on for a 75. But now this column is rising as there's a growing chance of only a 50 basis point hike. And you can see that reflected in here. So this column in here is now showing 275 basis points. 125 basis points by the time we get to September. So now this is showing a 50 and a 75. That's the best chance. And there is a chance over here of us only moving 250s, right? So this is showing what we've been seeing since the Fed and since the fact that growth has started to slow down, that the peak in inflation is coming closer. The peak in interest rates is coming closer. And then also, if we go look, we've already looked at going out into next year and here. So you can see in here 350 to 375. This is at the March meeting. If we go to the May meeting, 350, 375. If we go to the June meeting, 350, 375 just in here. And then definitely by the time we get to the July meeting, it's 325. So by July, we're certainly looking for interest rates cuts. And there's potential for those cuts. There's the betting in here now is it could come anywhere from March, May of next year. Okay. Right. Let's go take a look at some charts. I'm going to start off in here with the S&P 500. Actually, a quick nod to the treasuries before we do anything else. So having had that spurt higher, there's the spurt higher post the Fed, and then last week's push higher in prices. This is lower in yields. The market's been just in consolidation, really. We dipped lower early this week, slight rebound in here. We really do, if we want the stocks to recover, we need this to move higher in here, okay? So higher prices and lower yields are going to be supportive of stocks. Let's take, and at the moment, kind of sitting in no man's land, right? You had like a positive hammer pattern yesterday, and then today you've got kind of a little failure pattern. So the market has rallied, set back, kind of reversed the uptrend in here, the recovery trend, and now is kind of sitting and waiting, similar to what we've got with stocks, right? So we've got the stocks, the downtrend, has been slightly eased, the negative pressures by the rally from last week. And then this strong rally that we saw at the very end of last week, that was last Friday. Since then, so Monday, Tuesday, significantly lower, paused Monday, significantly lower. That data, that consumer confidence data yesterday, wiped out a lot of Friday's gain. So you've kind of eased the negative pressures from the bigger sell-off, not fully eased the pressures from this bigger sell-off that comes all the way from the beginning of the year, but certainly eased the negative pressures. We spoke about going up through. So this is the S&P up through the 50% retracement of the sell-off that we've seen from late May through mid-June. So we've got half of that back by the beginning of this week. However, now they've started to erode some of the positivity from the last week and a half recovery effort that we've seen from mid-June. So the market's kind of a little bit in no man's land on the bigger picture chart. If we go to the 15-minute chart, though, you'd have to say, right, the dominant theme in here comes from the dominant pressures in here come from the sell-off from yesterday. We've got this topping pattern in here. You'd argue there's a double top, high, down through that low. Now the measure on the double top, remember to measure a double top, it's going to be the distance in here. I don't think we've got a measuring tool in here. No, we don't. So, but the distance in here is going to be that distance from the peaks in here through here, extrapolated down from here. So you can see that's going to be that distance there to there, okay? This vertical distance here, and then it's going to be that distance extrapolated down from there. So we've already hit the target, right? We've already hit the target of the double top, okay? And now the market's still drifting lower. We are getting a little turn in here. There's no definable support apart from this trend line in here. So we do have this trend line that comes right off the low. I'm going to redraw this trend line because it's kind of got off its points in here. So this one off the very low. It comes off the very low in here. Remember, we had either this double-headed inverse head and shoulders, or it's like a quadruple bottom or a double bottom down here. And then if we draw through this low, you can see the market's coming down to it. So we've reversed this one in here. Let's get rid of some of this other analysis. In here, we've already reversed this uptrend. Okay, this more accelerated one that we get here from the 22nd of June. But from the very low through this low in here, you can see the market's approaching this trend line, start to pause, right? So we had the big impulsive move yesterday. It has drifted lower. We do still have lower lows and lower highs in here overnight. So this is the overnight activity, but the market's starting to respect this trend line. Now, if it takes out this trend line, it goes lower through these lows, you're bearish. You've got to say it's bearish going into today. However, it starts to take out these overnight peaks in here. So these are pretty much 38, 35, starts to look a little bit more positive. So 38, 35, it looks more positive, and below here. Keeping an eye on that German data. Now we've got 12 minutes to that data. Watching out for that German data. Above 38, 35, it starts to look more positive. You see these little failure peaks here and here. These are going to be important as well. 38, 55, 75, this one here. 38, 63 and a half. Okay, so those are some important markers on the way back higher in here. So, you'd have to say you'd have to be bearish going into the day, but the market looks like it's trying to base out. But remember, it's only basing out because this is pre-market activity, right? But it hasn't gone low of European stocks having that negative inflation data from Spain. Let's see how we get through the German data. 11 minutes now, okay? If we can get through that without going lower, this could be the beginning of a turn. If it breaks below these lows, you've got to be bearish. If it breaks below that trend line, going all the way back to the very low in here that we're seeing, from mid-June, it goes below this trend line. This is off of the 17th of June low and the 22nd of June low. Okay, if it takes out that trend line, then you're probably going to see this down 1.5%, 2% again today, right? Maybe more, maybe 3%. So watching out, but you'd have to say be negative going in. But if it takes out those peaks back through 38, 35, it looks slightly positive in here. Okay, so watching out for that. And then remember, you got all those central bank speakers. We've got we got the oil data as well coming through today. So we're watching out for all of that and further Fed speakers later this afternoon, evening. Okay, Nasdaq's going to be a similar story. Nasdaq's, remember, led us lower, and you can see in here the Nasdaq, compared to the S&P, is actually down through Friday's low, and we took out Friday's low, so definitely negative for the Nasdaq. And the recovery on the Nasdaq, let's have a look what we've got on the 15-minute chart now. So there's the impulsive move lower. We've taken out multiple supports. Let's have a look, see where the trend line is for the Nasdaq. If we go for the whole rally, if the equivalent kind of works, maybe it doesn't. So it's through this low in here. You'd have to take it through this low here, really. And we're going to extend that out. And then, oh, look, we're bang on it. So, I mean, it's not the greatest trend line, but, that's the correct way to draw the trend line off these two lows. We're sitting right on it right now, and we're kind of rebounding from it. You've got a string of lows over the last hour and a half. The market, drawing a line in the sand around 11,616, kind of trying to hold there and popping back higher. Again, you'd have to be bearish. You'd have to be bearish after the impulsive move lower and the lack of a rebound overnight. However, it takes out the overnight peak just there, the equivalent of the 38 level, 35 level on the S&P. So that there is 11,723.5. Back through 11,723.5, this starts to look positive again. Okay, so just watching out, and again, watching out for that German data, and then it's going to be the run into the US Open, and then watching out for the Fed, not the Fed speakers, the central bank speakers that we're going to get, and where's the timings on those? So it says, where are we? 9 Powell speaking at 9 o'clock Eastern time. Okay, so an hour and a half. So that's it's going to be interesting. Not long after. So that's pre. That's going to be. Let me get this right. Where are we now? 7:30. Yeah, so that's going to be pre the US equity market open, right? At 9 a.m. Yeah. Pre the US equity market open, and Lagarde also. I don't know these, but these could just be opening remarks. So you're going to have to watch out for what they're actually doing, because Lagarde is actually speaking again in here. So maybe that's her proper speech. Maybe it's going to be Powell kicking off. Okay. But yeah, certainly be watching that. Let's see. They've got a little speaker in here. I'm not sure whether you can watch this. Click here for full event details. I mean, this should be. You should be able to get this on the major news wires in here. Okay, if you are interested, you should be able to get that on the major news wires. I should think CNBC, etc. Okay. Right. What else do we have? Let's take a look at the commodity markets, and then I'll wrap us up. So first of all, oil. Can I say this is bullish? Boom, full straight up day this morning in here, wiped out a lot of the negativity from the sell-off, particularly above that peak there. It's looking a lot more positive in here now. Go to the 15-minute chart. We're just making new highs. The problem here is, do you buy it? I mean, clearly the trade is to buy it. But we've had bigger days in here the last 2-3 days. So has it got scope to go up to like 115, 116 today? Yes, it has. Is it overbought on the daily indicators? No, it isn't. Is it overbought on a 15-minute chart? Yes, it is. So you do your whole fire now. Remember, we've got the data coming up as well. The EIA data later today. I probably wanted to wait for a dip before I jump into this, because it's breaking to new highs right now, and it just feels a little overstretched. If you can get long back in here on a dip towards 112.50, 112, I think that's your ideal, is in that zone there. Maybe it's not the greatest trade to buy it right here, right now. And we'll take a look at gold. Couldn't be more range bound in here. Look, in this box in here that we've drawn, we're still stuck in there. Sideways city. We went towards the bottom end of the range, down towards this area, 1815, 1805 kind of area, and we've rebounded out of that today. And if we step into a 30-minute chart, you can see it's gone and tested the water. Remember these lows in here? I pointed out these lows. They where were they? I've got these on my daily report. 1816.3 and 1814.8. Now we've just spiked below those and back above those, and not only so, it's kind of washed out some longs, spiked below those lows, and then aggressively back higher in here. You'd have to say that's a big downside rejection. It held the actual low of the range down here, closer to 1806. And it's rebounded. You have to be bullish on that. But bullish within that, the fact that you step back out again and it's within the range. But you could easily see this back up to like 1834, 1840 kind of area today. But as a trade, I'm not sure there's a great trade in there. Going to it's just had a very explosive move. You're long, but tentatively long. Again, probably waiting for the next dip lower before you set into that long position. All right, guys, I'm going to wrap it up there. You've got 5 minutes right now until the German CPI. I know you guys are trading US markets, but that data is going to be important. It's a big economy. It's a big global economy. And you need to be keeping an eye on that particularly after that Spanish inflation data this morning. All right, have a great one. Take care. Stay safe and have a great trading day.